Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts, getting a lot of questions about the cloud, single, doubled, daily, weekly. I'll go over that in a second. First, probably the most important thing, we've increased liquidity, we've reversed QT, call it whatever you want, I don't care, call it a bailout, don't call it a comeback. It doesn't bother me either way. The point is, if number go up on liquidity, number has gone up on Bitcoin price, and we're seeing that now. Call it a confidence crisis. Again, it doesn't matter. It doesn't even matter what anybody wants to call it or label it. It doesn't need a label because we know it's happening. And we can see it in the liquidity metric or equation. I'm not even going to explain this equation. I'm going to lead you to this article by Arthur from August 23rd. Again, I'm going to link all this in the description below. Read it. I'm not going to try to butcher it and explain it. I'll also leave the TradingView ticker in the description below so that you can pull this up yourself. And you can look at all sorts of correlations with this, leading, lagging, blah, blah, blah. It's mostly lagging, leading price rather, which makes the most sense. So anyway, check it out. As far as what's going on right now, ETH is not it. And I'm going to lead with this because this leads into the cloud conversation. The reason I use the settings I use is for confidence in myself as far as trades I take. So if you like the daily default, if you like the 4-hour default, it doesn't matter to me. All I know is that when I'm trading, I know what I trust because I've used it for years. So whatever you trust the most is good for you. There are plenty of people who have lots of success on a single cloud. I found that it was too noisy, had me taking too many trades, and it was kind of very high on the noise to signal ratio. So as always, if that's the case on anything, you just keep going up the time frames until you sort of dial in whether or not you are taking too few trades relative to the opportunities, the risk reward, and whether you're making too many trades. So when I see something like this on ETH, BTC, thinking, yes, this is a bearish edge to edge, this is a bearish breakdown, it's still within this very large 600-day range. But with decently high confidence, especially with narrative backing this, yeah, this could go down to 0.55. Historically, ETH BTC has been extremely difficult to trade. So is this a direct trade I'm taking? No, I'm not short ETH BTC. I'm just long BTC and not anything ETH necessarily, right, relative to that. That's one way you can play this. So let's talk about Big Daddy Corn here. On the weekly, I'll specify single or double. This is doubled, okay? And if I see this, doesn't matter what it is, on the weekly, I know exactly where price wants to go. It wants to attempt to go to the key June. And I can say that with pretty high confidence because it's happened many, many times before throughout the, 10 years maybe? I haven't traded cloud for 10, but been here for 10. Anyway, point is 31, 32, 33, whatever this is on the key June is very high chance that we are going to reach for that level. And that's even before this weekly, that's as this is painting, right? Every iteration of the cloud on the higher time frames is just a different way to look at it on lower time frames, okay? So this is guaranteed some edge-to-edge trade on some lower time frame. This is some breakout on the daily Kuma breakout, right? If we're breaking this blue line, the Tenkan here, then we're breaking something somewhere else to the upside, right? Some resistance somewhere else. This is just perpetually drawing the 50% fib essentially from high to low of the range at X candles back. Now, if we look at the singled weekly, you get a similar picture, right? I'm not saying it's wrong. You could argue an edge-to-edge to 42. You could argue an edge-to-edge to 31. Perfectly fine. You could, quote-unquote, expect, call, whatever you want to think of that as this is forming, right? These are the 50% fibs. You just have to know what you're looking at. You had a bullish TK cross down here, which is a great sign that all the short momentum has been zeroed out, and you're resetting in an attempt for a reversal. You also have this inverted head and shoulders stuff going on, obviously. So singled on the weekly is probably good enough that the signals are slow enough that it's fine to use. I just don't use it regularly. One thing I will do is go between like the weekly and then like the 3-day or something on the doubled settings. But if we look at the doubled settings on the daily, we've technically been out of the cloud since the beginning of the year, mid-January. And almost always on the doubled settings, you will have a chart pattern to back you up. Even when this failed up here, this ascending triangle, even when this failed, even when the edge-to-edge technically failed, there was still a chart pattern there. There was even chart patterns in here, all sorts of stuff, inverted head and shoulders, Adam and Eve, despite these failures. But to me, on this time frame, there were still trades we're taking because I'm confident that there's a potential there. Anyways, point is now, yes, we had this sort of fake out to the downside on news, and people were asking me based on the cloud, when's the bullish TK cross? What do you do here? When things move extremely fast, you have to go down timeframes. When things are in a range like this, cloud is less useful because realistically, you should know that, okay, we're making higher highs, we're making lower lows. A trend following system is going to have a very hard time keeping up with that volatility on this time frame. ETH is very similar. I don't really care what the daily cloud looks like on ETH because I know that it's in a massive multi-month range, just up and down, up and down, up and down. Cloud is going to be extremely noisy, doubled, singled, tripled for the most part, and isn't going to really tell you much of anything. So yes, we have a bullish Kuma breakout. Again, yes, we have this chart pattern, which I think is plenty good enough to be real. I don't care what anybody thinks. Doesn't matter to me, right? We can argue about it, but that doesn't matter. The point is, like, what are you going to trade on? And for me, I'm confident that this was a good enough trade to take, right? So we're above the pivot. It measures to around 30 to 34, let's say. There's that weekly Kijun level again at around 32. So based on technicals alone, doesn't matter what's going on in the meat space. Based on technicals alone, this is good enough for that level. Now looking at the 12-hour, which is kind of the singled version of the daily, to me, it's just a little too noisy. Yes, you still get in, mid-January as far as that entry on the long side. You have that Adam and Eve, obviously. But this is the stuff that's problematic to me that comes up over and over again, is you get these fake out breakouts, and people tell me, look at RSI, look at volume, look at more stuff. I'm not convinced when I see this on the singled settings that that's the play. So that's why I like using the doubled settings. You can say, well, these singled breakouts are just edge-to-edge trades, and that's true, and they should be sort of treated as such. Edge-to-edge trades aren't necessarily a guarantee, and their hit rate has gone down significantly after 2022, where basically we had 2 or 3 failed edge-to-edge trades on the daily. But to me, the signals here are just very noisy. That's why I just don't use it. But that doesn't mean you can't, right? What do I care? If it works for you, it doesn't matter to me. And when we see stuff like this on the weekly, again, I don't care if you don't think this is an inverted head and shoulders. It looks good enough to me that it's close enough, along with this weekly cloud breakout, which again, you always see hand in hand, typically is any reversal on the cloud will be preceded by a building chart pattern, almost always. On any coin, any stock, whatever, anything, doesn't matter. You will almost always see some sort of chart pattern, which is why I talk about chart patterns all the time. So this illustrates a few things: chart pattern, cloud stuff. Also, the importance of just basic horizontal levels, right? The cloud has a hard time sort of reading this, as choppy as it is in this range, right? You get this stuff, you kind of this fake out breakout stuff. You get this failure of continuation stuff, right? The cloud doesn't know that there's a Ponzi scheme exploding. It doesn't care about plus token. It doesn't care about coronavirus, right? It just doesn't care. It doesn't care about all the liquidity injected into the system. It's just looking at levels. So the point is, use the trend following system when there's a trend, and use range bound, horizontal lines, just basic stuff when it's not necessarily trending, but it's definitely on your side when you start to see price above the weekly like that. Here's another, I just love using this, even though it's kind of silly, memey. The power law corridor, logarithmic regression, right? There's all sorts of versions of this. It was built around here, so it's based on an equation of the previous 3 all-time highs. And, it picked up coronavirus pretty well. It picked up this entirety of this range so far, and we're above this resistance level. So I like where this sits. It doesn't point to 1 million in 90 days, but it does point to a pretty decent cycle high, assuming we don't get some crazy rehypothecation again from some mega scammer selling Bitcoin and buying altcoins, right? I still like that chart. So BTC looks great to me. The narrative's there, the technicals are there, points to higher highs. Anything past 32 is a gift in the near term. Ideally, as always, we get these impulses of momentum, and then we reconsolidate. We get people selling who were in lower. We get people, buying the sellers' coins when things finally start to settle down and it gets to their price, right? So these things take time. I wouldn't expect this stuff to go straight up. And as many people have said on Twitter, you don't want to live in a world necessarily where Bitcoin goes to $1 million in 90 days. This is ETH, still in the range, still hasn't done much since since going to ultrasound money. You know, you're not seeing a bunch of people flock to buy ETH here. We will see ETH revenge at some point in time because it is exiting a multi-month range. In a vacuum, this looks very good for higher highs. This looks very good for 2,500, 2,200, 2,700, whatever it is, something in there, depending on how you might want to measure this range. The most liberal measurement would be taking this high and this low. That would give you 2,500 to 3,000 targets probably. A more conservative measurement would probably be measuring the middle of the support resistance, whatever. I like higher highs. I like potentially even a pivot to pivot trade. You know, on Bitcoin as well, pivot to pivot trade would take you to 38. And that could happen after reconsolidation, you know, somewhere in the 30s. I think that's perfectly reasonable. So we'll see what happens when we get there. But for ETH, you know, again, somewhere in the 2000s, reconsolidate, maybe 3. We aren't seeing ETH and BTC move together, so this would have to be some sort of rotation type trade, most likely, and or post Shanghai, which there's a lot of just uncertainty still, you know, regardless of how certain you are that it's going to be a success and everything's going to be fine. I don't disagree, but the market is waiting, right? The market's waiting for something here for ETH, whatever it is, some new narrative, DeFi, ICOs, NFTs, doesn't matter. It just isn't moving like BTC is here. And here's ETH on the daily cloud. On the doubled settings, again, this is extremely noisy. You're getting fake outs, you're getting all sorts of stuff. You could say, well, this is when FTX happened, sure. But you would have gotten demolished, right? That's why I like paying attention to the range the most, or just going extremely high up on the time frames. This is the 2-day. We're getting a bullish Kumo breakout on the 2-day. We're waiting on this bullish Kumo twist. But again, do you really need the cloud here? No, you just need to know that there's a range and there's a horizontal level that almost certainly everybody is watching. And that level's somewhere around 2,000. This is the 3-day, and you can see 2,200 here, 2,800, right? So there are targets and levels that are reasonable based on a 50% retracement prior. And yes, this has bullish momentum. Yes, it's, you know, an edge-to-edge trade, all that sort of thing. But ultimately, it comes down to, for me anyway, that range of, you know, 1,000 to 2,000. And on the weekly, you could argue even Adam and Eve here, as well as inverted head and shoulders, all sorts of reversal patterns. This thing should go higher eventually. And again, here's the weekly Kijun at 2222. So are we like mega turbo, long-term bullish based on weekly ETH, weekly BTC? No, we've got plenty of time. But the good news is we're about a year away from a year and a month, let's say, Bitcoin's having. So we've got plenty of time to consolidate, plenty of time to grind. You know, one of the best things in hindsight is this 2016, 2017, just ultra mega slow grind, higher. That's how you get these rallies. I mean, 2020 wasn't any different, right? Just grindy. And I see reminiscence of that in this zone here as we're just grinding for many, many months. So that's all for this one. Let me know what you think in the comments below. Like, dislike, share, subscribe, and happy trading.